Hello, ladies and gentlemen, and welcome to the 2022 January dividend portfolio update. So, before we jump into this month's things, I'd like to establish a few goals for the year. So, in 2022, I would like portfolio contributions to be around $3,200 at the end of the year. This is in line with investing $200 a month and, $2,400 every year. My goal is to reach an expected annual dividend of $100. This is also kind of in line with the goal that we set before. Long-term growth, 5 and 10 year, but specifically 10 year, I would like that to be around 15%. I think this is a pretty unrealistic goal, probably, but if we can keep it on, I don't know, 12, 13, 14%, that would be pretty satisfactory, but we'll meet the goal if we reach 15%. So that's something to keep in mind. If we reach the contribution of $3,200 and we have the annual dividend of $100, we'll reach a yield on around 3%, and I think that's a pretty good spot to be in. So that's going to be our long-term goal for the portfolio, to be around that 3% mark. I would also like to further diversify by investing in more sectors. Like right now, we've been pretty heavy in some sectors, and we'll see if we can mitigate some of that if there are some interesting stocks that pop up. And in line with that and the diversification that I would like to reach, I would like to try and have 15 different stocks in the portfolio at the end of the year. So these 6 things will be the main focus of the year, and then in December of this year we'll see where we've ended up and how we've been able to follow through on these goals. So if we jump into the dividends for the month, we've gained $3.6 from Altria and $0.74 from Realty Income, which totals out at $4.32. No, $4.34. Apparently I can't read the big text on my screen, but that's fine. Nothing hugely interesting, but we'll move on. So this is the current portfolio dashboard. If you pay attention, you can see the stocks that we've added for this month. Long-term growth is looking pretty solid at 11 and 12, almost 13%, which means that we are kinda close on our target 15%. Not really there, but kinda close. We have some lesser growth stocks in the portfolio, which drags it down, and then we have some especially new stocks that have really good growth that pulls us back up again. So we've been pretty lucky so far. We're up 3.25%. I would attribute that to 110% luck and nothing else. Then the average yield and yield on cost is not super interesting right now, but the yield right now is 3.84% with slightly better yield on cost, but and we have an expected annual dividend of $39 right now, which means that we are $60 off. But yeah, let's jump into the first buy of the month. So the first buy of the month is going to be Starbucks Corp. This is I'm a little bit torn on both of the stocks from this month. but I still end up believing that this is solid, solid investments and something that I'm interested in following long term. So, things that I really like about Starbucks. Obviously, the 10-year growth rate of 20.72% is really good. And I hope that's going to continue. I have some doubts about that, but we'll get around to that a little bit later. So they're also a long-term dividend payer, 11 plus years right now. And they've looked strong even through the pandemic, and they've increased their dividends and so on. For a restaurant-focused company, I'd say that's really good. So I think they look strong. And the last thing that I really like about this stock is that they're focused on expanding outside of the US. I think they're closing down some restaurants in the US particularly, but they have been expanding at a more rapid rate outside of the US. So it's still a net growth. And, diversifying from to other markets, I think that's a good thing. So, we get to the dislikes, and some of these, or both of them actually, are pretty big dislikes. So coming into 2022, I think that having a lot of debt is probably not the greatest idea. A lot of people are talking about interest rates going up and so on. So I'm a little bit worried about the debt, and I think if we get around to the next point, I think they're likely to drop further in value, and I think they're likely to slow down the growth rate of their dividends. And that's purely, their stock has been declining, which is why I got kind of interested in buying it, because it seemed like a pretty good opportunity. If we go into the next slide here, I bought Starbucks for $98.45, which is a pretty fair price, I think. It just the other week or 2 weeks ago, maybe something like that, or a month ago, I think the stock was $106. So it's declined a little bit recently, and I think this decline is probably going to continue a little bit. But I thought $98 was a pretty decent entry point for me. If we look at the growth rates, 1 year 9.52, 3 year 11.71, I think that's super solid considering the pandemic. 5 year obviously, and 10 year, they're really, really good, but I think it's likely that 2022 we probably see maybe 5%, 6%, 7%, something like that. And I'm fine with that. Anywho, let's get into the next one. So, Oracle, again, a stock that I'm a little bit torn about in just generally. I really, really like their long-term growth rate. Dividend has grown 18.22% over the last 10 years. Last year, it grew by 25%. So both long-term and short-term dividends look really solid. They're a long-term dividend payer, so I think that that's gonna continue. Now, the reason I'm torn about this stock is two things. They recently acquired Cerner to enter into the system software healthcare industry. I think that brings a lot of long-term possibilities. There's a market between IT services and healthcare services that is very interesting, and I think it's a very specialized market, and I think there's a lot of possibilities, especially long term in this market. So that kind of, brings it up for me. The other thing is something that I really like is that this is core IT services. So I said before that probably the IT sector is something that I don't want to go into too deep, and it's most likely going to be less than 5% of my portfolio. And the reason for that is I think it's a very volatile segment. But those 5%, I was interested in investing in things that are core IT services, right? So things like, what do you build other systems with? Oracle is one of those companies. Other things that I might be interested in is, companies that produce semiconductors or like smaller hardware components, things like that. I think that might be a good move. So I really like the core IT services of Oracle. Going into the dislikes, again, company in debt, there's it's the same worry as Starbucks, but it's a slightly different sector. And then, the Cerner acquisition, while it brings a lot of possibilities, it also means that they're moving away from their core business a little bit. I'm not sure. I'm a little bit torn about it. It means a lot of possibilities, but it also means that, when you're entering something that you're not quite as familiar with, it brings some risk to it. Outside of that, I think it adds a lot of complexity to the company, and I hope that they are ready for it, because that's something that they will have to, deal with. And then, my last dislike is just the IT sector in general. Part of this is because my day job is working in the IT sector, so I have a little bit of familiarity with it. So there's that. Let's jump into the next slide. I bought Oracle for $86.28. Again, a stock that has been going down a little bit recently. But it has really solid growth and still a 1.5% dividend yield. So I think this long term, this could be a really good thing. But we'll see. And then we go into the portfolio overview. So right now we have 7 stocks in the portfolio, with the 2 biggest ones are the ones that we bought first, the Realty Income and Altria. Their allocation is going to go down over time, obviously, since we're diversifying a lot more. And but our big winners, definitely Altria and definitely AbbVie. Somehow I managed to buy AbbVie at a super opportune time, considering the stock has increased $10 per share since I bought it. I bought it in November, December, so it's pretty short term still. But I like. Hormel has also been pretty good to us, 4% up or almost 4% up. I think that's pretty amazing. But again, all these gains and losses, definitely attributing that to pure luck, because it's not a long enough time frame to draw any conclusions from it. And on the right side, we can see the different growth rates. Short term, we have two big winners, and that's going to be AbbVie and Oracle probably. We'll see what Altria does. I'm expecting about the same this year. That's it for the portfolio overview. And that concludes the video. Thanks for watching, and have a really nice day.